Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, we are discussing stocks that gapped down hard on Friday's close and this overnight rally in the S&P futures in the face of what was, again, not a great weekend for as far as the virus is concerned, but the market does not seem to care this morning. So we'll talk about that. Overnight rally plus stocks that gap down at the close on Friday. Our guest is Sean Udall. He's the CIO of Quantum Trading Strategies, joins our show periodically to talk about what tech stocks are on his radar. We'll also take your questions from our chat. And speaking of the chat, if you're in there, you want to hit that like button, subscribe to our channel. That helps us out with YouTube. We appreciate that. I'll bring Joel on now. Joel, why don't you give us an update here? I kind of teased an overnight rally here in the S&Ps. We sort of opened down and have gone straight up more or less since the open last night in the S&Ps. But tell us about this market here.
Yeah, big old range overnight. Followed through on that week close. We had a week open, but immediately bottomed at 27.25. Not much down there, folks. We kind of bolted out of last week's low area. That was 100 points lower at 29.2375. We got all those losses back. Kind of had a depressed close at 59.50. Got all the way up to 96.75. So that's a real nice overnight range. Holding on to those gains as we speak. So important to make it through that pre-market high, get back into the 3,100 handle. Last week's high is nowhere near here, 31.56 and a quarter. So really middle ground for the S&Ps this morning, a little bit on the strong side. We have crude down 25 cents, spent a little time over 40, but now it's down at 25 cents at 39 and a half. Gold's in the green, silver's in the green, also Bitcoin's in the green here by $185, but 9,500 where Bitcoin's trading. Triple D, some excitement there on the close on Friday.
Yeah, it was one of the biggest closes in a long time where imbalances really impacted price. And we'll bring up some charts. We'll show you the movement from Friday. If you're seeing some stocks trading significantly higher and you don't see the news on them, it's just because the closes were all messed up for a lot of these. And we know a lot of times these things bounce back when you just see these big moves just on a closing imbalance. Bring up CMG, might be the most pronounced, probably because it's $1,000 stock. So not on a percentage basis, but on a points basis, because this stock, if you bring up the intraday from Friday at the close, was trading around 1038 at 1550 when the imbalance came out. And it was huge sell imbalance here, obviously. And the stock continued to fall and then gap down into the close. And you're looking at it here. It's all pretty much in the last few minutes. It gapped all the way down to 1010. So it's talking about a stock that lost 25 points in the last 10 minutes just because of an imbalance. Obviously, the market sold off too because there was so many sell imbalances on different stocks. Look at the utility stocks. Same story over here as well. They really got hammered. Southern, I participated in this one and bought the close. Already sold it, so I can freely talk about it. It bounced right after hours. 55.50 at 3:30, closed to 53.61. So here's a stock that has a beta of less than the market, is conservative, and just hammered on the close because somebody wanted the hell out, and they got out, and they got out at a really poor price, all the way down to 53.61. If you look this morning, it's already trading over 54. So all the utility stocks, it was like a program that just didn't want to own utilities. DT Energy, straight down $3.50. Again, these stocks are conservative. You know, a 2-point move in Southern, sometimes that's what it does all week. That's what it did in the last 10 minutes. So that's why we're highlighting them. Duke Energy was the same thing. I still have a small position and long in Duke because I bought the close, but I'll work out of that today. That's just an overnight position. I sold most of it already. A couple stocks went the other way. STT was one that actually went the other way. So State Street Corp, if you look at had a big buy imbalance, and I look at straight up and going opposite the market into the close, up to 65.40 from 64 just 10 minutes before the close. So that's a big up move. And the other one I wanted to highlight, a big one in the tech world, AVGO Broadcom, huge sell into the close. 312 it was trading at about 20 minutes before, obviously imbalance post of 350, and then they just hammered it, lost over $10 in the last 20 minutes. So Broadcom got hit too. None of these plays were news related, individual, all related to just somebody wanted the hell out on the close. Big sell imbalances pushing them down.
Dennis, we've talked about it after the close and over the weekend a little bit. Why do people put these orders in like this?
I have been trying to figure that out for my entire 20-year career. I can tell you it's all options related for the most part. It's options expiration. You've got participants that are moving stocks around. Obviously, you got the big expiration that's happening. So you see these big movements typically, they can happen randomly, but for the most part, they happen on option expiration, the third Friday of the month. They happen at the end of the quarter and the end of the month. That's usually the big ones. You will see another one that happens once a year where you're going to see big movements, and it just so happens to be this Friday. The fourth Friday in June is the Russell rebalance, and you will see some hammered moves here too. Some stocks going to go up, some stocks are going to go down, all related to, the rebalancing of the Russell. So you have index traders that are pushing prices around, and that's a little bit different. When you have an index rebalancing, we know the reason for that. It's because some stocks got to go into the index, some stocks got to go out. There's obviously, those are predictable trades, so traders will basically, trade ahead of those and try to make money off of those. We used to try to figure them out too ahead of time, and you can easily figure out what's going in, what's going out. But like I said, the last few years, those have been crowded, so sometimes you've seen instances where stocks that are going into the index actually sell off on the last day, and stocks that are coming out of the index actually rally on the last day. You've seen that happen too. So it's more of an unpredictable trade than it used to be. But all you need to know as individual retail traders or individual traders is that there's going to be major movement towards the close on Friday. And again, that's what you need to know here too. You don't want to get caught on the wrong side of this thing, because you might be having a level on like Southern and saying, if I've ever got down to 55, I buy it. But if you're not looking at those imbalances, you could have got a hell of a lot cheaper. So the way I played Southern was, I don't always know. Sometimes these things can flip. So it would, in hindsight's 2020. You could have just sold it at 350 at like 55 and covered it on the close of 53.61 and made $1.40. But sometimes they flip. Sometimes they do funny things. They're a little more unpredictable. So the way I usually play it is, when you get a significant move like that, I usually put an LOC order, which is a limit on close order. So this is an order to execute on the close or don't execute me at all. So when I see the big sell imbalance in Southern, what I do is I throw a buy limit on close. So if stock was trading at 54.5, I'm going to say, okay, and I did this. I actually bought Southern on the close with multiple orders. I think I put like 54.25, I'll buy some. 54, I'll buy some. 53.75, I'll buy some. So I put those LOC. So that means limit on close. So so I put an order to buy it at 54.25. Even though the stock's trading at 54, it will not execute unless the closing print is below that 54.25. So what it's doing, it's guaranteeing me the closing print if it's below that my limit price. So when it traded down and the closing print was going to be 53.61, I get filled on all of those orders at the close of 53.61. I was immediately able to sell them a lot of the stock at 54.10, because it just so happens to be some people who are bidding it up after hours. So I was immediately able to make 50 cents on part of the order. And then I sold some rest of them at 54, which I got done maybe 10 or 15 minutes later. So I was able to get out of all of that, making 40, 50 cents on the close, just on the bounce play. Basically looking at it saying it's probably going to bounce after hours because the sell-off was ridiculous. And that was all due to the imbalance. So I did Southern, I did DT Energy, I did Duke. Normally I'm running full automation on that, so I could have even got more stocks, but we had some other issues going on a personal level there, so I wasn't trading fully automated on Friday. So I was just cherry picking a few stocks, and these are the ones that I did well on.
Just want to mention too, Dennis, you also have end of the month coming up next Tuesday.
Yeah, so it's a wild month for these moves. You're going to see Friday, you're going to see some big movement from the Russell rebalance. And then, like you said, end of the quarter, it's not even the end of the month, Joel, it's the end of the quarter. And the end of the quarter is always bigger than the end of the month. The end of the month, you sometimes see some movements. You always see some movements on the end of the quarter. So again, you're going to see some of these crazy moves on Friday at the close, and you're going to see some of these crazy moves on Tuesday at the close for the end of the quarter. So just be ready, and you might get a stock. Maybe there's a stock you want. You might be able to get it at a really good price because it gets pushed around by institutional money as they're obviously, doing maybe a little bit of window dressing at the end of the quarter, but also the Russell rebalance as indexers have to buy some stocks and have to sell other stocks. So if you like a stock from a fundamental basis, it might just push it to your price. So what I would say is if you like a stock, keep an eye and you might get a price that you like.
I think been talking to a couple different friends that are involved more in like the institutional end and stuff. And there could be a lot of stock to sell on Tuesday. I mean, we've had, one hell of a run since March. So I don't know what kind of rebalancing you have to do. If Amazon's whacked way out of your, your portfolio size, we've had a tremendous run. So we'll see. I mean, in this market, there could be tremendous sellers, but also tremendous buyers. But I think that's something, if there's a significant amount to sell on Tuesday for the rebalancing, could just be a little bit weak ahead of it, but not this morning. We lost we're basically almost back to where we were trading at like 4 o'clock. That was the crazy action after 4 to 15, and then they closed it. Yeah, and then boy. But just the other thing too, just kind of maybe this is like Friday's open, man. Did things look great on that open, that expiration open? We're gonna rip and close on the highs for the week.
Nope.
And
they pulled the rug out from under it almost immediately.
Yep.
We've seen this multiple times last week. Stocks opening at the highs of the lows. Again, it was another day that if you were just flat out saying, we're gapping up, and and I was fooled on that one because I wasn't actively selling that open. But right after the open, I got nervous and I was like, man, they're starting to leak these already. So I sold a couple stocks out of the swing portfolio. I got rid of my cheesecake, CAKE, at 24 and change. So that was a good sell because the stock's down to 22 handle. I still held on to the GE, and it's just a swing trade. It's still above the level where I bought it, and I said I would stop myself out below 684. I wanted to get up there. I tried to sell it at 790, and it never quite got there that next day. It only got up to 774, so I missed the out. Now it's 718. I'm still up in it because I bought it right around $7, but I'm watching this one. I'm still in it. That's the only stock that I would say I'm a little uncomfortable with because most of the stocks in my longer term portfolio, we know the kind of stocks I have. Apple, Microsoft, the tech. I'm just loaded up with tech and, all the gamers, which I've talked about before. I've been in a lot of the lockdown stocks, not only the lockdown stocks, but stocks that I feel work in both environments, in a reopening or a lockdown. And we've talked about all those stocks as well. So, and the only one this is a swing trade one that is starting to look weaker, but it's up today and it's holding up. So I'm probably hold for that.
Let me see what we got here for GE.
Give me a technical on GE. What should I do?
Oh man,
I don't love it.
I feel bad because I told you that hold on for that.
You told me to hold for 790. I didn't quite get it. It's like the JP Morgan trade. Hold out for another buck. You get a buck cheaper. Now it's 100 points higher.
You might. It's not trading up much. You might. You could probably for sure get out at 728 today.
Well, you can never for sure anything, but I might be able to get out at 728.
But yesterday's high, I'd go out a little bit ahead of that, 740. If you'd be happy with that. Yesterday,
that'd be half of the gains that I had. So you're getting some of it back. So, anyways, that's the only one. When I picked up all those, we call them trash stocks. Again, they're the reopening plays. When I picked all those up, and we know when I bought them was when we had that dip on June the 15th. Which was, I believe, Monday. Was it Monday? Yeah, Monday. And I bought Cake, and I bought GE, and I bought Kohl's, and I bought a couple other ones in there too. But I've sold most of them. The only one I'm still in is GE. So the Kohl's I sold the next day. It popped 15%. I was like, good enough. It was ridiculous. You can see the move. I'm going to get a 15% move in one day in a stock that you don't really believe in. You take it and you run, and it opened up at the high that day. So I basically got, the majority of that move, buying at the low of the day before almost and selling near the high the next day. Cake I held on to. I should have sold it that day too. But again, what happened with Cake was it popped up and then it came back in, and then it kind of started to struggle around 25. So that's kind of was already in my head that I was like, I don't think it's going back through 25. And so I got out of that one. The other one I sold was TAP. I had this one for a bit. Again, same story. I bought it on a dip, and it had actually ripped up. I bought this back actually in early June. It ran all the way to 43.44 on the reopening trade, and then it sold off really fast. Well, it kind of came back, and you could see how I was struggling right around 40. So I actually got out, I think around like 39.75 or something, just on Friday. Again, sold another one. So I was lightening up on the stocks that I thought, the reopening stocks. And because the reopening, let's be honest, isn't going that well.
Yeah, let's talk about some of those stocks.
Let's talk about the reopening here. We're going to get to space too. I know space up, everybody's excited about it. I still own space. We'll talk about that in a little bit. We're just still focusing overall market here, though. We've went green. But the reopening here, Spencer, Israel, let's bring you into the show here because it's been quiet in the background. We've been quiet. The reopening hasn't really went as well as we'd hoped. I mean, obviously, there's some problems down in the southern states. It's not as bad as the first wave was in a lot of cases in certain states, but in some of these states, they're actually making new highs on caseloads. And that's kind of concerning.
Yeah, second week in a row that we're seeing just a sort of a barrage of new cases over the weekend here. So caseloads are now increasing in 23 of the states in this country, and we're making new highs, new daily highs in states like California, in Florida, and Texas. So it's really not great. It's a bit too soon to tell, I think, how this will impact things because obviously the death is a lagging indicator, so we're not seeing,
yes, for sure.
We're not seeing that, and that's ultimately what matters. And also, some states like Michigan were slower to reopen, and we're just now coming into it or coming into the reopening. So, the states that did reopen quicker, states like Florida and Georgia, not going.
They're ahead of us.
Yeah, they're ahead of us. Not going great, but. I think still a little bit too soon to tell. It's not going great. That's the takeaway from this weekend. It's not going. Yeah. It's not.
And some people
horribly. I mean, it probably could be worse, but
it's not. Yeah, we're not going to say it's going bad, but it's not going great. And it's the reason why some of these reopening stocks have continued to show weakness last week. There's no other reason. Why Boeing and the airlines, have been showing relative weakness to the overall market, and tech made new highs. You can see the clear allocation of capital going and say, hey, if reopening is not going well, I don't want to own restaurants. I don't want to own airlines. I don't want to own cruise lines. I want to own tech. And we saw it clearly in the stocks. A lot of people pointing out to me the fact that, hey, even though cases are going up, hospitalizations really aren't climbing that quickly. But remember one thing, which, some people might be forgetting, is that hospitalizations are going to lag by a couple of weeks because as people get sick, they don't get hospitalized the first day you get COVID. You get hospitalized later on when you're fighting the battle here. So I wouldn't say you're out of the woods just because hospitalizations aren't going up. I think you're seeing cases really rise in the last week to week and a half. You'd think the hospitals it would start to indicate if it is going to get ugly again in the next week or two. So you got to think there's a 2 to 3 week lag, which there was with the first wave as well. People were getting cases, but they weren't getting sick right away. They weren't getting sick enough that they needed hospitalization. I mean, you get this on day one, you got a cough, you got the sniffles, and then it gets, obviously progressively worse for some people. And eventually some people need hospitalization. But even in that, it was only, I think the cases that only needed hospitalization was under 15%. So, a lot of people are going to be able to fight this off on their own. This isn't like a death sentence for everyone. But, with the death rate still cooking around 6 or 7%, it's still a relatively scary disease.
It's also worth knowing that, every new case increases the chance of us going back into quarantine and back into state. And that's really what the market is afraid of.
It is. It's very afraid of it. Because a lot of businesses won't survive a second lockdown. Right. And, Mnuchin has said we're not going into second lockdown. And that's good. I mean, from, his perspective, he can say we're not going to go into a second lockdown. Sure, that's fine. But that being said, if you start to see cases spike up around you, you're going to be hesitant. There's going to be certain people like myself who are going to be hesitant to do normal activities. People aren't running to their sit-down restaurants when everybody around them has COVID. So we saw, individual businesses have to close. The poor, and I feel so bad for the businesses, but, it's the circumstances that we're in. In Georgia, Valdosta, they were talking on CNBC with an owner of a private little restaurant. And, this person here has, reopened unsuccessfully, open for 8 days and had to reclose because 3 of the staffers got it. And then, all of a sudden, so it's got to reclose, and they're spending extra cost trying to figure out how to, clean the restaurant and get rid of it. I mean, it's nearly impossible, and you feel so bad for the small business owner because it was nothing that they did. It's not their fault. But despite, the government saying it's okay to go out to your restaurant now, there's certain restaurants that are obviously taking extra precautions. But not only that, there's just people that are not going. So I'm going to say it again. I think a third of the population is very spooked about this. I've always said, I've said this the whole time. I think the population is kind of broke up into thirds. A third are really spooked. A third thinks it's just bogus and I'm going to go about my business. And a third are on the fence. But if you lose a third of your patrons at these individual restaurants, that's tough business. It's tough to do. And even if you're reopening, they got to keep the 6 foot distance. If your restaurant used to hold 200, now it's going to hold 100. It's hard to pay the bills with only half the customers. So there's a lot of difficulties to navigate here, which makes me not want to own, all of these restaurants. And some of them have come all the way back. I mean, we talked about Darden restaurants, coming all the way back to $92. I mean, did it have any business coming out? Now it's back at 70. So now it starts to, okay, yes, the Olive Garden, obviously we're talking about, but these are all impacted. These businesses are all impacted everywhere. So these is stuff you've got to consider as investors. As traders, you go with the flow. You go with what's hot. You go with momentum. But as an investor, a long-term investor saying, I'm going to just throw, this restaurant stock in my long-term portfolio because I know it's going to come back eventually, or this airline stock in my long-term portfolio because I know it's going to come back eventually. It doesn't have to do anything. So never over-leverage yourself. If you're a long-term investor, don't go all in on American Airlines. Don't go, and it's going to be the segue we're going to take you to right now, because, these companies are still struggling. AAL, major dilution here this morning. So Spencer, give us the details for this one.
Well, first, before you move on,
I went everywhere there.
You know what the problem is we're just doing too much testing. I mean,
okay, we shouldn't even go there. But that the comment, and obviously we got a lot of Trump supporters that listen to, but the comment was ridiculous. They're trying to back it off with a joke. We know, over the weekend, Trump said, I don't know if it was a joke. I don't know if it wasn't a joke. It just shouldn't have been said. Obviously, he probably regrets saying it. But he said, they're testing too much, and that's why we're getting more cases. We know we need to test to be able to get on top of this thing. So White House is backing, off those comments. And obviously, there's been a spokesperson that has said that it was a joke. We are testing. We're taking it very seriously. I don't know why it was said. It obviously shouldn't have been said. He probably, the media is running with it. So it's not a political show. I'm not going to say whether Trump's right or wrong, or whether vote for Trump or vote for Biden. But obviously, I think there's a mistake.
Well, back in my cage.
It goes to what I always said, where if it weren't for tests, I would have gone to Harvard. I mean, the tests are really what kept me back. Is just the fact that I had to prove
Stop testing.
I had to prove my intelligence, and I didn't want to have to prove my intelligence like that. So anyway, speaking of Darden real fast, Darden reports earnings a Thursday before the open, so keep that on your if you're trading that stock. Okay, American Airlines. This is interesting. This was out here over the weekend. A common stock offering. They're going to try and raise $3.5 billion between stocks and convertible notes, and the stock portion of that is going to be, let me see here, $750 million of common shares. And as William Lay put it in the YouTube chat, more shares for Robinhood users to buy, right? It's good news.
I mean, and somewhat you can see this is going to happen in so many stocks. We saw it with US Steel last week, and US Steel wasn't even on the radar to have a secondary, and they had a huge one, diluting themselves by like 30%. So the dilution, I believe, is less than that. I didn't actually go and calculate it here this morning. Maybe it's not. If you want to do the math in the background, we can figure out the dilution quickly by the amount of shares they're going to sell. But they're doing a convertible note, so that's dilution itself. Then they're doing, a common stock offering. That's more dilution. And obviously, they're doing some. There's 4 different parts to this, all trying to raise capital because they need it. They need the capital to basically bridge themselves through this crisis. And without the capital, these companies could potentially go bankrupt. So it's good. We don't know how it's going to go, the offering. We hope it's going to go well, that there's going to be actually buyers for this offering. We hope it's not going to be at a price significantly lower. But we know in some cases, they've had to go way down to find liquidity. And when CCL did this a while ago, they had to go much lower than what the market price was to find the buyers for the secondary offering. So just because you're doing a secondary doesn't mean it's going to be done at 15. I don't think we have a price on it yet. It could be 13, the price. And what happens is the arbitrage will tell you behind it. So your request from your broker to participate in the secondary, you get it at 13. What do? They turn around, they sell it at 14.50, and everybody just bought at 13 hits the bid, because they're making the immediate $1.50. Now, it's not necessary that you always get a better price. Like sometimes the offering prices can come up higher. Like the DraftKings price was not that much when they did theirs at 40. It wasn't much below the market price, but there's a market for DraftKings. People kind of want to own this. American Airlines, there's probably not going to be as much interest in something like that, so the price could be a lot worse.
Do we have a price on that?
I don't think so, not yet. No, they'll probably shop it. Usually takes a day or two, shop it, feel for where, there's demand. People say, I'd buy some at 14, I'd buy some at 13, I'd buy some at 13.5. They feel at their institutional customers. Some people say maybe I'll buy it at 15, but when the market's pricing it down 14.58, the speculators are saying it's going to be below this price. So it could be 13, it could be 12. I mean, they come out, let's just say hypothetically, not saying this is going to happen, they come out with a 12. You see American Airlines trade down 13.5 tomorrow. So you might think this is a great dip to buy, but they come out with a 12 and you all of a sudden get a whole bunch of people in from 12. They hit the bid. So that's the arbitrage behind it. That knocks the price back down. And not only that, people aren't hitting the bid when they get the stock. They hit it short, knowing that they're getting the stock. So because that'll cover them in. So there's lots of mechanics behind, secondaries, obviously, but they're never usually good for shareholders. In this case, American Airlines, if they don't do the secondary, though, what's the alternative? They might go bankrupt. So they're not doing this just because, they were doing, let's put this in perspective. American Airlines is doing buybacks.
They're not doing it because they want to.
They're not doing it because they want to. They're doing it because they have to. Do you want to invest in companies? Like in the case of DraftKings, they're doing offerings to expand the business. In this case, they're doing offerings to save the business. I would rather invest in companies that are doing offerings to grow the business as opposed to these that are in trouble. And if we don't get, this money, we're in trouble. And I mean, it's not American Airlines' fault. It's nobody's fault. It's COVID. It's happened. It happened, from that, possibly that lab in China. And I mean, everybody's suffering for it. So we don't really even know the cause of it all, but that's been the speculation. So you look at American Airlines down here at $1.38 and you think, how can I go wrong? It's eventually going to bounce back. I'll tell you, if that pricing comes out in that secondary at 12, you're going to be disappointed about a 14.60. If the pricing comes out at 15, then it'll be different. But do you really think, let's just think logically. You're an institutional trader. You see the stock trading 14.60. You're saying, I'll pay 15 for it. No, I'm not. I think most people are saying I'm not going to pay 15 for a stock I can buy in the open market at 14.61. So it's probably going to be lower than 14.60, that secondary price, when they come out with it. And obviously we're going to see when that comes out. But again, when you're buying these airlines, and we obviously know there's some very prominent figures in the day trading world that have been going all in on airlines. I mean, this party was great in early June. It might start to bounce back, or maybe turns around, but the sentiment has completely turned towards the sector. It's completely turned towards the cruise lines. These stocks topped out on the day that we said they are topping out. I probably on all the years I've been making calls.
That's one of your best.
I said I'd ring the register. I think this is the top. I think this is upside capitulation. I even tweeted it out that morning ahead of time. Somebody said it'd be nice if you told us this stuff ahead of time. I did.
You did that one.
I did
that one
on the airlines.
Yep.
I said on the show, go to the June 5th show at 9:00 in the morning. I said if I was long these things, I'd be selling them because I think that this is upside capitulation where everybody just has to get in. American Airlines topped out that day at $22.80. It's $14. LUV opened almost right at the high that day, $42.35. It's now $33. So this is experience. This is just 20 years of experience in reading tapes, and we've seen this stuff before. These crazy, ridiculous 2-day moves.
What was the volume on that day, too?
On companies that are struggling, and the upside, and the volume. It was upside capitulation that day. We can safely say that now in hindsight, but we could say it predicting 30 minutes before it happened on this show because it looked like it was going to happen. Thanks for the same thing.
Yep. It traded $400 million the day before, and then the day it hit that $22.80, it traded $428 million. And then they pounded it pretty good. And then it showed life for like 1 or 2 days. Never even got into 21 handle. I'll say for your American Airlines traders, investors, we're well through that went well through how much you can move today. We've already gave back half of that move from 8.25 to 22.80. So I don't think you can honestly, get excited about this stock until you get back over 15.50 and you close over 15.50. That 15.50.42 happened to be the low on Friday, so that's your gap fill. But just right here, you had the move, you've given half back, and man, oh man, you're not trying. You're not trying. So we'll see what happens at 15, if it can get over 15.50. Right now, looks like they're going to have to price this thing 14.50 or lower to get it done.
Yeah,
so
probably.
Yeah, that's what the market. And I just for
the
a
way
reference, I just want to say X
go.
going to get anywhere near that 8.58. It got to 8.48 and 8.46 on Thursday and Friday.
What stock was that? The 8.48?
X. They did the offering at
US
8.50 yet. I was just illustrating how it's resistance.
Good point, Joel. I mean, here's US Steel, and a lot of times these offerings, the way I've traded them before, sometimes can act like a floor where they come down to the offering price and those help. US Steel, what was the offering price? Wasn't it 8.50? The secondary?
I thought it was 8.50. Spencer corrected me and said it was 8.58.
It's 8.58.
8.58. So the people who participated in the US Steel secondary, in this case, unless they were really on and they knew they were going to get stock and they sold it short after hours on the night that they obviously announced the thing, it actually, you could have lost money on that secondary. Usually these secondaries you don't lose money on because usually they price them below enough of the market, but they hammered it below the price. So American Airlines don't, you could say, okay, comes out with an offering of 14. You think, okay, I'm safe at 14. In the US Steel case, you weren't. Now the thing's at 13. Now, all that being said, we know the retail trader has never had more power than they have before. There's a lot of retail traders that are licking their chops and saying, okay, this is my opportunity. I'm going to jump in American Airlines. I'm telling you from my experience, I wouldn't do that. I would wait until the secondary price came out so I get a feel for where, this other, 700 and how much is this? Is the common stock offering?
$750 million.
So where this other $750 million worth of stock is going to be priced at, because that's going to come in back into the market for sure. It gets issued and then it sells. That's usually what this thing does. So that's how these things work. So I think that's how I would play it, is I would wait until I actually knew the secondary price and then go from there. Remember, you got a convertible offering too. And they'll do the same thing. The converts will offer and sell the equities against it too. So you got two different tranches here that are going to come in and sell stock. And they're already doing it this morning. That's why. There's already arbitrage that are already pre-doing it. The question is, what is those pricings and when is it done? Because the pricing comes out of 14.5, maybe you're safe at 14.60. In the case of US Steel, you wouldn't have been. But if that pricing comes out of 13, you're probably going to regret buying at 14.61. So I'd wait till the dust settles on this if I was trying to pick the bottom of American Airlines. But I'm not trying to pick the bottom. I have no interest in owning the stock until at least starts to show some life, and it's not showing life here at all.
Yeah, and then for the X, now if it can get back over 8.50, 8.58, then maybe some people are waiting to still have the stock and they're going to ride it out. And if it gets above there, you might get a little pop. But Dennis, I think that your first scenario was correct. Like maybe even these guys had the heads up on the 16th or on the 17th or the 18th.
You hope that doesn't happen, but in reality,
10:47 to 9:38. Come on. Well, we'll see. I mean, let's see X get back. I mean, also for X, I mean, what are you predicating buying that stock on? I mean, is the economy? Are we gonna just roll right out of this? Start building buildings and tons of cars and everything. I mean, long-term trend.
It's a reopening stock. You're hoping that this COVID
a reopening
goes away.
Stock that didn't do well when we were open.
Well, there's a good point there too. I mean, a lot of these stocks that people are coming into weren't doing that well when we were open. US Steel in the last 2 years has went from $30, it went to $10, 30 to 10 before COVID even happened. Then now COVID happened and got hammered, and it got back up and got all the losses back from COVID, which probably was just overdone. I own one steel stock. It's Nucor. I've had it in there for years. It's been a dog. I wish I actually didn't have it, but it's been the best of breed. There's not a lot of steel stocks that you've held for 5 years and are not down. So, there's one, and obviously it is down from where it was 3 years ago. But I mean, the last 7-8 years, you look at where Nucor was back in 2014, it's the same price. So you say, what a crappy stock. look at where U.S. Steel was in 2014. You know, it was over $30, and you think, oh well, okay, Nucor has done a lot better. So it's tricky. This is just, you know, long-term investing is always tricky. I've always been better at the short-term stuff, but I've owned one steel stock in there. It's paid me a little dividend along the way, but it's been a dog. I don't want to put in another steel stock dog.
All right, waiting on Sean Udall to join us here, so let's go to space here.
Woohoo! All right.
Sure.
They got your catalyst this morning, Dennis. Virgin Galactic announced that they had signed an agreement with NASA to provide a private spaceflight to the ISS.
I'm long the stock. I bought the stock. We know I've been hugging off this 15 level. I've been looking at a stop out below 14. It came close a couple of times, but it's been holding on. I just think, you know, this is an evaluation call. Obviously, they don't even make money. They don't sell anything really yet. They're trying to, though. They're getting some contracts.
That's a recipe for a stock going up, Dennis.
Well, it is sometimes. I mean, all this market likes is a story.
A story.
A story matters more than anything. Nikola, a story. You know, Tesla has been a story for a long time. It's been a story stock. What I mean by a story is people talk about it. It's got growth. It's got like, oh, this is the next big thing. Space SPCE, I believe, has the potential to start to get hot with a story like that. It's why I'm invested in it. It's the only reason I'm invested in it. But the story stock could get hot. And I think, you know, I think this could go. I've said before, I think it could go back up to $30, $35 if the market just tanks and we all go into, you know, lockdown again and COVID takes over. I mean, this is going to be a different, you know, it's obviously not going to perform. This isn't a stock that's going to perform in a COVID environment. But if I'm buying a stock that I think has the potential to get hot, I think this was one of them. It's up 17% here. I'm in from 16, so I was down on Friday. I'm back up in it again. But I've got this in the long-term portfolio. I'm planning on holding on to it.
What made you hold on, Dennis? I mean, you know,
because this has the potential for a story. That's the only reason.
Okay.
I mean, I've seen so many story stocks just take off. Valuations don't matter at all. Shopify is the best example. I mean, Shopify, yeah, it's growing. It's all, you know, it's an awesome company firing on all cylinders. But it's also a story. It's got the story behind it, you know, e-commerce platform to bring small business to e-commerce. I mean, the media talks about this, and look at what Shopify has done. Valuation's ridiculous. It makes no sense to be trading where it is, but it doesn't matter because the story is still hot. Just like Tesla, the valuation really has never made any sense, but the story is hot, and it remains hot. I think space falls into that category. I think this is a story that could get hot. It's not hot. The story is not like everybody's talking about space. But it's the kind of stock that everybody could eventually be talking about. Every time SpaceX, you said it, Spencer, SpaceX launches, SPCE participates in it. So it's like a little derivative play, even though it's not even related to Elon Musk's SpaceX. It gets a pop when SpaceX is successful because they see this as a similar company to SpaceX. Yep. Yes.
I thought your thesis was you were just shorting Earth and going along the rest of the solar system.
Yeah, COVID. Maybe this is a COVID stock. Yeah, when we got to escape from the planet, everybody's going to be piling their money into space because we got to get out of here because this planet's ruined. All right, now that's a conspiracy theory.
That's even deep for us, right?
Sean's going to join us here in a couple
deep
minutes.
Space drill.
He just has to dial in. So Sean,
we'll give Sean a break. It's early out there.
Yeah, it's really early where he is. Yep. So he'll be with us in a couple minutes. In the meantime, let's keep on going here.
Tyson.
Yeah, Tyson Foods. Let's go there. So
eat more chicken.
Or eat less chicken.
Eat less chicken. Yeah, less chicken in China. China has temporarily, they say, suspended their imports from Tyson Foods. This is a trade tension related.
Is it trade tension related, or are they worried because the whole the fish that came in from Europe and they thought was COVID?
It's both. Let's say it's both. There were definitely some trade undertones here. They said it's because of COVID, but I'll say there are some definitely underlying trade tensions going on here.
There's trade tensions. Don't kid yourself. This isn't like we're going to be signing a big trade deal with China next week. There's still obviously some major issues there.
When's phase 2?
So Tyson Foods, it's down here. I don't know. Chicken isn't going away. I would just say it's been a trading range from basically. Let's forget about this little top we had in June where we tried to break out and the failed breakout happened. You've had a top of the range around 65, a bottom of the range of 55, really in the last couple of months. 60, you got some initial support there.
Yep.
Joel likes those levels. I like it better at 55. I don't think chicken's going away. I know everybody thinks we're all going to be eating veggie burgers for the rest of our life, but I still like a good chicken burger as well, and I like my chicken. So I think, still safe and Tyson chicken. I don't know if I'm coming at 60. I think you could eventually get it cheaper at 55, but I don't mind it here. I'm not buying. I think you're gonna get it. I think you'd get it at 60. I think if you buy at 61.80 this morning, I think you're early. I think you're gonna get but let's get our technician on here.
Yeah,
level.
Not even anywhere near. Well, you got to bounce off 6109. I'll be looking at the dailies, 59.5. There was a low at 60.22, and that was flanked by a couple lows at 59.5. So I would look at that as a target on the downside today. If you're chicken, I don't think we'll see that 55. On the upside, if you're hoping for a gap fill, you only got a buck here. So if you're stuck long this thing, you could get a little pop off the open, and yesterday's low was 62.83. I'll use that as resistance. Longer term, Dennis, you mentioned the multiple lows at 55. But there's been some chicken problems going on. Have you watched this Pilgrim's Pride at all? Pilgrim's Pride with some price fixing, and I don't know if they dragged Tyson into it, but did Pilgrim's Pride had that big move down. So the chicken sector is just not hot. I have no interest really. This Pilgrim Pride's really close to. It's lower than move.
There's no story going to happen here in chicken.
Yeah.
We'll tell you that.
I don't know what's going on with chicken.
It's valuation. It's got a dividend. Tyson chickens 2.72%. I mean, it gets up to over 3%. People get interested just from a dividend perspective,
right,
for the yield perspective. So it has that underlying dividend protection, we call it, at a certain point. Pilgrim's Pride does not have a dividend, I don't believe. Different story. I don't follow it as closely. We know they do sell chicken. I would say $16 is, maybe support
look at
on
the
that.
low of the move.
Yeah, I don't know if it's getting down there again. But if I was buying a chicken, I'd buy Tyson chicken.
All right,
maybe if Virgin Galactic is only going to serve chicken on their space races, then that might give it a little boost. Let's just look at SPCE. That is a big move. It's up 249. So I don't know if we have it. I know, Dennis, I know you're kind of looking at this from the longer term.
Well, we talked a bit, but I want your technical thoughts. Yeah,
1858. I know you would have let it go there. That's where
the scalper blood in me lets some of my long-term stuff go.
Yeah. But
I want to hold this. Slap me across the side of the head if I just sell this because it starts going up. I do that all too often.
I'd say
why is the chart blurry, guys? I don't know why.
I don't know.
Problems with our charts here this morning.
If it holds 1730, where I don't expect it to, there were your two highs at 1737, 1729, back from the 8th and 9th. Yard traded 1742. So if it holds there, maybe I get a look at 1774, getting up there, the pre-market high. You absolutely will not see that today. But this would be one, if you're buying this thing off the open and, you're looking for, a big payday, you don't want to have it open 1740 and then be printing 1715 or 1720 on you. You want it wherever they get that opening print at. To me, it is opening up into a little bit of resistance. Do we got Mr. Udall yet?
Yes, we do. And before I bring him on, I just want to say, if you want to feel really bad about chicken and bad about yourself for eating chicken, watch Super Size Me 2 on Netflix. You'll feel really bad.
Super Size Me 2. Okay.
I didn't know there was a part 2.
You'll feel really bad about.
Is that about McDonald's?
Eating? No, it's about chicken. It's all about chicken in America. So it'll make you feel really bad about yourself for eating chicken. All right, let's bring Sean on right now. Sean Udall.
I like chicken.
You won't after watching that. CIO of Quantum Trading Strategy. Sean, good morning.
Good morning, and I'm free to say that chicken's fantastic. So I can guarantee you, I can watch whatever that show is, and it would not change my opinion because, hey, I kind of know how animals are slaughtered. So it's not that
pretty.
hard of a thing to figure out. No, it's not pretty. It's ugly, but
I
Look,
like eating chicken.
If you love meat, you gotta eat chicken. You gotta eat beef. You gotta eat pork. I like them all.
I mean, I'm with you. I still eat chicken, but
that might be a con. I wonder if eating meat is gonna turn into a, oh boy, you're eating meat. That means you don't you're not part of this politically correct movement if you're eating meat. So I bet that's the next thing to come. Remember, did they try to outlaw sodas a few years ago, like big sodas? I think New York tried to outlaw big sodas. So.
Well, I think they did, but they only outlawed like the super size, like 7-Eleven, like big gulps, I think.
I love the big gulp.
Idiots.
I loved the big gulp. As a kid, I was like, go to 7-Eleven, get that big gulp.
Greatest
awesome.
thing ever.
Greatest thing ever.
By the way, I drink I probably drink 3 or 4 Cokes a day. Easy.
Sean
Warren.
Greatest thing in the world.
Coca-Cola advertising right here.
You and Warren.
Love it.
Warren. Warren's lived to 90 years old.
Yeah. I think
Drinking
Warren drinks like 8 or 9 a day.
That's a rumor. I started that rumor, I think.
No,
okay,
he said it.
He
said it in meeting. Oh, every annual meeting, he basically says how many Cokes he drinks.
Wait here, just real quick on that soda tax thing. So that it was the New York, it was proposed in New York City, and the New York State Court of Appeals overruled it. So it didn't happen. So there, you can still get your giant.
All I'm gonna say, just be careful what you wish for, people. Be careful what you wish for. If you don't want your freedoms, you will lose all of your freedoms. That's all I'm gonna say.
All right, Sean, let's talk about just the overall market here and then stocks on your radar because you are the tech stock strategist. So how have you been sort of approaching things the past few weeks? It's been a really tricky market.
Well, I mean, it's basically 1999. So it's been arguably my best trading market I've experienced personally, I think, ever. It's funny that we're on again. It's been a while. I think the last time I was on, I was kind of set up the same way. I've actually kind of raised a lot of cash again. So basically pre-Corona, I wasn't raising cash because of Corona, but I was raising cash because I thought we were in basically a bubble market of some variety. And I think Dennis kind of agreed with me and Joel agreed with me. But yeah, we're basically in some kind of a bubble market. It was mostly cloud bubble, Tesla. Yeah, so here's the funny thing happened. We basically had a massively larger correction than I thought we were going to have. But it really didn't hurt much. As long as you were not levered out, it really didn't hurt. It shouldn't have hurt at all. And so I found myself able to actually buy cloud stocks again. Not all of them, but Workday 123, and I don't know, there's a bunch of them. So there's a bunch of them. And a lot of my old names that were former buy list names like Splunk and CyberArk came into buy ranges again. I ended up hitting a lot more of the newer ones. Elastic is a big name for me. That's ESTC, still have it. But I was buying that just at a shockingly, stupendously stupid number. I think 42 to 47. Still have most of that, actually. But no, as far as the market, it's this very strange market. Instead of getting too macro, I'm going to kind of jump on space because I don't know how much time I have here today. So I'm going to jump on space and say, I'm actually kind of interested in space. It's a name I normally wouldn't. I'd almost kind of just scoff it off and kind of ignore it. But you got a Tesla at 1,000. Right or wrong, it's there, and it's not correcting. It just doesn't want to come in much. Nikola was a crazy good trade. But Nikola hasn't really come down that much given how much it ran. I was interested in the name as BTIQ. And so the bottom line is space was probably it was the first big SPAC to take off. We could make a case it might be the best one because usually every new IPO cycle, the first one's the best one. And by the way, Workday might have been the first in that contingent. So anyway, you go on and on. I kind of think space could really go because it didn't participate at all kind of in the frothy phase of the reopen market or the frothy phase of when cloud stocks went nuts. So that could actually be interesting. There's no way to fundamentally value it. So you just have to trade it. Use your trading instinct and use your technicals. And I would be surprised if that doesn't put in a pretty good move. Now, is a pretty good move, does it break the former highs, or is a pretty good move to something low 20s or so? I don't know. But I think a pretty good move would be well in excess of. I think you guys are saying scalping it. And yeah, you could. But I think a pretty good move is well in excess, something well in excess of $20 for sure. So I don't know what Dennis thinks about that, but I think if you're long,
I'm long it. So
yeah,
I like it.
I think you got to ride it, and I think you got to let it go, and maybe put in a wide trailing stop. And hey, if you make a bunch of money, good. If you lose some, well, you know what your risk you're taking, basically. And here's the thing: it trades firm. Like, I don't think you got much risk below $15 as long as again, you're not margined up or something.
Sean, a question from our chat here, and maybe you just answered it. I don't know, but what is your favorite, most disruptive stock right now?
That's a really good question. I don't know if I really think that way anymore. I used to when disruptive stocks were really cheap. I just hate stocks when they get to these crazy, stupid prices that I know are unsustainably justified, but you can ride them for a while. You can ride the market. I mean, I'm going to answer a little differently, and because maybe something super disruptive will sort of enter my brain. But I do think on relative valuation metrics and relative growth metrics and disruption. I mean, this is a company that's when it's kind of eating the space, and it is Elastic. And I had no plans of even talking about it other than just it kind of came into my head as one of the very many names I bought dirt cheap in May and April, or I'm sorry, in March and April. But it's most people really probably don't understand the company. They probably just think, oh, hey, it's another cloud software. So let's look at the chart, blah, blah, blah. They don't really get to know these things. And they're basically search.
Which stock are you talking?
You want to talk about Elastic, ESTC.
Okay. Yep.
So if, guess what hasn't been disrupted forever? Google. The search industry is in, if you ask me, it's in major need of disruption, actually. It's a prime time to disrupt it. Elastic is not web search, though. It's corporate search. It's IT search. It's basically search engines for internal websites, intranet search, if you will. But what they've done is they've taken their really strong revenue and cash flow growth, and they've morphed and they've bought into other things. Basically, what everybody's kind of termed a new term, it's not that new to me. People have been in the Splunk for years, know this term called observability. And what observability is a very critical piece of the analysis of all the data you generate once you start doing big data. So Elastic is arguably the king of observability. I think the old king was Splunk. I think the new king is them. So they're disrupting the space. They could theoretically launch a search engine and start competing with Google. Google, in my mind, kind of has a problem. It's super dominant. It's great. It's always my favorite of the FANG names. I think I've said that for years with you guys. But they have a problem now, and the problem is possible monopolistic kind. I mean, they're not a monopoly because they wanted to be. They just did it because they're so good. They kind of beat everybody. But man, I don't know about you guys, but Chrome's just getting slowed down. It's kind of reminding me of what Yahoo was like when Google disrupted Yahoo. So the world is wide open for a brand new, clean, super fast, efficient, limited ads, limited things that track you everywhere you go, your movement history, your everything you've ever done on the web. And there are starting to be some browsers, but you need deep pockets. So if Elastic were to go more web-based browsing, I think it would have a stupid run. But their core business of observability and internal web search and crawling and data logging are huge. And by the way, so in all the things they're doing with security, it's a great business anyway. So it's a name I really they probably replaced like Mule and some of my other names of yore as probably one of my favorite high growth software names. Like, when I say one of my favorites, probably like top three. And
Sean, Sean, we're up
ahead.
against the clock here, but
Sure.
We just got one more question for you. We had a request from a customer that what do people do on the West Coast? What's your routine? I know what yours is. I know you do your independent research. Do you do a lot of stuff at night? How early you get up in the morning? Just talk about your routine.
Well, yeah. So
before that 9 a.m.
routine. Yeah. So I would say the biggest part of a routine to be an effective trader dealing with the West Coast time frame is, well, I mean, one, some people just get weird and they kind of morph into an East Coast time frame. I would try to avoid that. Meaning, they get up like at 2:30 or 3. I mean, I'm up between 4:30 and 5:30 every day. That's early enough. But I say you got to kind of do some pre-market work in the night. So in other words, whatever your routine would be if you were on the East Coast, let's say, or Midwest, I think you got to kind of put in an hour at night. Now, I can't, my routine's way different than other people's because I basically get prepared to trade the stocks that I want to trade. So in other words, I'm not I don't wake up and look at the news and go, oh, hey, those four stocks have big moves, therefore I'm going to trade them. That's only relevant to me if they're a name I quote unquote cover or know. Yeah. So mine, but I would say whatever your routine is, but I mean, I don't know how many hours a day I put in, probably 16 hours a day. So a lot of my pre-routine is done the night before, but you can do a lot of your pre-routine your last 2 hours of the day of trading. So, you get your chart set up, you think about what the things you need to think about to trade effectively. What are your key names you're going to trade off? Hey, I'm obviously watching more SPACs today than I did 3 months ago. I could care less about airlines a few months ago. Now I'm trading airlines. I could care less about finance stocks a few months ago. Now I'm trading banks. So the bottom line is, you move with the market, you do things. But yeah, I think if you are dedicated on the West Coast and on that West Coast time frame, to be really good and be sharp, one, you have to be rested and physically fit and all that stuff. So I think you got to do like an hour that you would normally have time to do on the East Coast. You got to do the day before. And that may sound odd, but I almost think everybody should do it that way. Yeah, maybe a Coke. A Coke might help.
The 4 Cokes help
the
on the East Coast.
The legal one, of course. But no, the bottom line is, do whatever you need to do to get ready. But I would say, I would almost say what I do would be effective for anybody. Because I think you can get a little lazy. Oh, I'm not going to look at the stuff and I'll do whatever. And then I'll just look at it tomorrow morning. I don't know. I think if you kind of do that, whether you're East Coast, West Coast, you might miss trade. So basically I say do whatever you need to do to prepare so that your prep time the next morning really isn't that big.
All right, Sean Udall is the CIO of Quantum Trading Strategies. We appreciate you. Well, we know you're already up early, but we appreciate you spending some time this morning with us, Sean. Have a good one and be safe out there.
You too. Thanks for having me, guys. Take care.
Thanks, Sean.
8:59. Just about wrapping up here, guys. Any final thoughts here today?
It's a bounce back. So you think, oh, I'm coming here and buying on the cheap. You're really not here this morning because we were 655 handles lower overnight here. So we've already had the bounce. We had the huge sell-off overnight. Sunday night, we opened and we tanked in the first hour, and then the dippers come in and our relentless overnight pumper, whoever that is, was hard at work last night to bring us all the way back to scratch. So, I mean, the big rally has already happened. You obviously have some people maybe caught long from Friday. So as you start to come back into pricing here, it's not surprising that we start to stall out near settlement because you have traders who are maybe caught in that last 10 minutes on the wrong side. So I think it's a struggle for us just to continue, to just go up to 310, 312. I'd be more of a seller into the strength here, I think. And I know you're looking at me and saying, what strength? Well, there's strength because we were way weaker overnight. So again, I'm still focused on tech stocks as the longs. Even like a stock like you just talked about, Sean, talking about ESTC. I mean, here's a stock that's in a clear uptrend. Here's a stock that is looking to break out. This is the kind of stock that I would want to own. I don't want to go and start picking bottoms in the airlines here this morning, even though they look cheap. We don't know where this pricing is. We know there's more dilution coming for a lot more of these companies potentially. Obviously, we kind of get a feel from where American Airlines is. Maybe there's going to be another trade, but I like to buy stocks when they start going up, not try to call bottoms. It's fun to call bottoms, but really it's dangerous strategy.
Yep.
It's better. I like to buy stocks in clear uptrends as opposed to buying stocks that are breaking trend or even, in downtrends. All right.
Real quick, someone asked about Microsoft. I mean, you got close to 200 on Friday, 199.29 was your high. So if you're looking for a big target on that, I would say an intermediate number to me would be 196.32. That was your old, no, that was Thursday's close. And then also your old time closing high, and that is 196.84. So if you're looking for something ahead of that 199.29, two closes, two all time high closes there. Let's call it 196.50. As far as like the overall market goes, the easy trade, which I didn't do last night, was to go long at some point. Yeah,
easy trade that's worked
I was
nonstop since the
celebrating
beginning of
Father's
time.
Day instead of buying the dip. That was a mistake. But now, I mean, we're right back reset where we were Friday before we fell off a cliff. So I think a lot of people are getting the money back. So in order for me to get really bullish on the day, you got to take out that 96.75, that pre-market high, getting a 3,100 handle. And then, we had a close last week at 31.18. But the longer it takes us to breach that pre-market high, 30.96.75, and getting a 31 handle, I think a little bit more of a back and fill, maybe down to that Friday's close at 59.50.
Again, one thing to consider is that some of these stocks have been on a run, like Microsoft has had a little bit of a run in the last 4 or 5 days. I mean, stocks, again, you're chasing a little bit, even like the gamers, which I've talked, and I'm long all of them. They've been on a pretty good tear. So could they cool off for a few days? I'm not saying come in here and buy Take-Two, that it's the next thing taken off. The time to buy Take-Two was when we were talking about it a few weeks ago, and everybody's throwing it out at 125. Well, it's back at 142. So, when everybody's like, oh, it's all about the reopening, we got to buy airlines, we got to pile into all these stocks because they're all going back to all-time highs and it's all going to be good. And we're selling all the gamers and we're selling all the lockdown stocks because we don't need those anymore because we're all going to go back to our normal way of life. That call was wrong. That was at the beginning of June, and those people who were doing that trade were wrong. The exact bottom of Take-Two, if you look here, June 5th, when it got down to $124.86. And it's not a coincidence that on June 5th, American Airlines topped out. And I remember that day I said the stocks that I would be buying right now are those gamers, and the stocks that have been beat up, the lockdown stocks, are because they're totally out of favor. And you know what? It's going to turn again. And it turned that morning. And so now you're looking, okay, it's tough to just come in here and buy Take-Two now at 142. I'm still own it. I'm still in it because I think, this trade is not done yet, but I'd like a pullback in some of these gamers to, before if I wasn't already in them.
And
so,
I know my horse came in fifth. I was right for half. I was right for half of the race.
Yeah.
And he did it. He got out to the lead, and then he didn't get covered up. And you could, I was watching it with Lisa and Emily, and I'm like, when he didn't get covered up, I go, my horse has just turned into a pig. And that's the way he finished the race. But I just was commenting on that, and the winner looked good. Maybe we'll have a Triple Crown winner with Tis the Law.
All right, just to recap here is a list in Benzinga Pro of all the stocks we talked about on today's show. I'll scroll down a little bit so you can see we talked about Microsoft and Nikola and Take-Two at the end here. But this is a list of all the stocks discussed on the show today. If you want to keep them on your radar for today, I want to thank our guest, Sean Udall. Thanks to all of you in our chats, all three of them. There's a chat on premarket.benzinga.com. There's a chat on Benzinga Pro, and there's a chat on YouTube. If you are on YouTube, please don't forget to like this video and hit that subscribe button. That helps us out immensely with our YouTube overlords. We appreciate that. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Joel and I will be back at 3:40 p.m. Eastern Time. In the meantime, everyone have a great rest of your Monday, and wherever you are, stay safe and good luck.